Earlier today, the RBI announced several relief measures for the healthcare sector, for vaccine manufacturers, for individuals, for MSMEs. Now, this comes at a time when India is battling this very, very vicious, virulent strain of the virus and a very, very vicious, virulent phase of the virus of the COVID-19 pandemic. So it's important to see what kind of impact these measures will have on the economy, on the healthcare sector, and on India's war against the COVID-19. So Ramya Nair, who tracks the economy for us, who's done a story for us after having sort of read the fine print of these announcements as well, is with us today. Ramya, thank you for joining us in Government Matters.
Hi.
So as I said, Ramya, you read through the fine print of what has been announced. First, let's talk about the broader points, and then let's talk about what these really mean in terms of the impact they're likely to have.
So I'll first talk about the healthcare sector and then probably move on to individuals and small borrowers. What they have announced for the healthcare sector is basically easy access to funds. So the RBI has opened a 50,000 crore liquidity window with itself. What banks can do now is banks can use those funds and then lend to companies in the healthcare sector. So the companies in the healthcare sector is a very wide range of definition that the RBI has given. I think specifically addressing the kind of shortages that we are seeing in the healthcare sector now. So one, vaccine manufacturers are eligible to get loans under this window. So are vaccine importers, and also those who use raw materials of vaccines, those who import raw materials of vaccines, they are also eligible. Then you have logistics firms who are eligible. You have hospitals which are eligible. You have even pathology labs, right? So that their testing capacity can increase, even they are eligible to get loans. Even firms who are actually, manufacturing or supplying oxygen and ventilators, even they are eligible to get loans. So the definition is very wide. Interestingly, even individuals who are COVID patients and need funds for treatment can actually use this window. So how the process will work is the banks will use these funds and then lend to these borrowers. The loans can be up to a tenor of 3 years. And since banks are getting this at the repo rate, that's around 4%. So one would assume that the rates that these borrowers will also get would be around 6 to 7%, as in the normal lending rates of banks. So that is what the RBI has announced. And interestingly, the previous time such kind of windows have been announced, you've typically seen a lot of risk aversion among banks. Banks don't really want to lend to sectors which they think are not going to repay, right? So this time the RBI has also announced incentives upfront to encourage banks to lend to the healthcare sector. These would include things like, classification of these loans as the priority sector lending, asking banks to create this kind of a COVID loan book, and assuring them that equivalent to that, there are some incentives that have been attached to that also. So there's a lot of nudge also from the RBI to banks that go out and lend to the sector. And RBI has talked about how it is trying to ensure that there's an ease of liquidity for this sector.
Right. So now, Ramya, as you rightly pointed out, ease of liquidity for this sector also something that is much needed at this point. But what kind of multiplier effect is this expected to have in terms of how much is it going to ease the burden on India's health sector?
Right. So, you have heard, at least from vaccine manufacturers who've been very vocal about this, you have heard how Serum Institute has kept talking about the fact that they need more funds to ramp up their production capacity. So something like this will help these manufacturers and, actually ramping up the production capacity. So that is one. Hospitals, again, the kind of medical equipment they need, the kind of infrastructure ramp up that they need, it will help these even hospitals to expand capacity, probably not construct buildings, but probably utilize existing space and get more medical equipment needed to, handle this kind of a pandemic. And across the sector, right, the way the RBI has formulated this, it seems like the entire healthcare, the supply sector, the whole supply chain is being given that liquidity ease measure. So this will help, obviously, but end of the day, it will depend on if the healthcare manufacturers do want to go out and take loans.
Right. So, sorry.
No, I'm saying for vaccine manufacturers, yes, because they have been talking about the fact that they need some money to ramp up their capacity. I'm not sure about hospital chains and how they would react. One would have to wait and see how they will react to this new provision to figure out if they're going to actually avail this.
Right. Ramya, but what was the forecast on the economy? Mr. Shaktikant Das, in fact, has said some things.
Yeah, so he's cautious about the impact that it will have. He's kind of talked about how contact intensive sectors, there will be an impact, obviously, because again, everything is under lockdown. But he's not that pessimistic. So his statements, if you would read, he's saying aggregate demand is hit, but very marginally, not like how it was hit last year. Supply chains have not been disrupted. Manufacturing units do continue to operate, and so the impact on consumption per se is very minimal right now. It's talked about a lot about how agriculture is doing well. The forecast of a good monsoon does help. The bumper production does help. So he's talked about those things. Uh, he says the future is bright.
Right, right. I saw that in the story.
Yes. So, the pandemic, though debilitating, is not insurmountable. The RBI remains ready to take all actions, even unconventional measures if required, and it will be proactive and it will work with the government. So that is the assurance that the governor has sought to give today to markets and to all stakeholders in this.
Right. Okay. So let's take this question from Raj. He wants to know whether all individual borrowers are eligible for loan moratorium like last year. If yes, what is the process?
So it will be the same process that will be followed last year. So interestingly, what they have done is they have even included those individuals who were not in stress last year and probably would not have opted for the moratorium or the loan restructuring, and they have given them the option of doing it this year. So if you haven't opted for this the previous time, that was when it was offered, if I'm not mistaken, August, September last year. And if you were a standard account means if you were making payments on time as of 31st March 2021, then you can approach your bank and ask for your loan to be restructured. You can approach your bank up till 30th September when this whole process can go on till that is the time that they have given. So it does help individual borrowers to the extent that if your repayment capacity has got impacted now, and you can actually go to your bank and ask for this kind of a moratorium. It will depend on the terms that the banks negotiate with every customer. So you'll have to wait and see what kind of a fine print that banks introduce, into how they will allow these loans to be restructured.
So, Ramya, can we expect any more relief measures, any more softs? Because last year we saw there were a series of announcements at short intervals for targeting various sectors.
Right. This time, government. Yeah, sorry. This time, the government has announced some measures this time, as in, that free food grain facility has already been extended. But in terms of the big measures, yes, these are the first ones. The governor's statement is kind of an indication of what is to come, right? As in, he's talking about that these are only the initial set of measures, and as and when required, depending on the impact that the government and the RBI see on economic activity. So far, they seem to be relatively optimistic that the impact would be less this time compared to last year because units are still functioning. I don't know how, if that optimism is misplaced. If you would look at reports, Maruti Suzuki has already announced that it's going to, cut down its production given that demand has fallen. So does seem to be some kind of a caution that is at least coming from automobile makers, about future demand. So it is possible that this will get seeped into other industries also, especially those of consumer durable goods, right? Probably not of your daily items or food items, but possibly of these high value goods. There could be some kind of an impact. One will have to wait and see on how exactly this will go forward. And I'm sure the government and the RBI will respond as necessary.
Right. But Ramya, as they say, the devil lies in the detail. Now, you did point out how the government has tried to incentivize banks to ensure that they don't shy away from giving such loans. But what has been the kind of reaction from banks? Are they, are they open to this, or do you still sense reluctance?
Okay, there are two sides to it. Once when the RBI had announced their own relief measures the last time around, banks had offered it to those select sectors which were selected, which were considered to be stressed, but the response was lukewarm at best among corporates as well as among MSMEs. So this time around, again, one would have to wait and watch what is the kind of response that the schemes get. One, because the schemes come with very stringent safeguards. Not all companies may be ready to accept those kind of terms. That is one reason why companies don't really opt for this kind of a loan restructuring. So one will have to wait and see what are the terms. On the bank's part, I think as long as their terms are met, there should not be much reluctance because this kind of a window that they get. So what what banks are getting from RBI are really low cost funds, right? Because the rates at which the banks are getting these funds is 4%. Whereas if you would look at the cost of deposits of most banks, it would be around 5 to 6%. So versus getting money at 5 to 6% from deposits, the banks are actually getting this money at 4%. So there's a good margin to protect. And obviously banks will do the due diligence, right? None of the banks have been asked to relax their due diligence while giving loans. So they will only give it to one company which they think will be able to repay. So I think the RBI has kind of given this sufficient incentives for banks to go ahead and take this, especially in something like a priority sector classification. Most banks struggle to meet the priority sector lending targets. I think it's around 30% of the loan book. So most banks struggle to meet that. So giving this kind of a dispensation does help banks also. So banks should be able to interested in availing of the scheme.
Right. Okay. So the next question is from Prithvi. How does it help the MSME sector, and can we expect more socks for this sector, because this is among the worst hit since the COVID-19 pandemic?
Right. So for MSMEs, they've interestingly announced a couple of 2-3 things. One is, as I said, the loan restructuring that has been announced for individuals that has been extended to MSMEs also. So all MSMEs whose aggregate loan exposure is as of 31st March is 25 crores can avail restructuring if they want to. Restructuring of their loan would basically mean probably a moratorium on their loan. Basically, they won't have to repay for a few months. And then after a few months, they'll start repaying and the loan tenor will probably be increased, so they say by a year or two. Even for those who have already undertaken restructuring the previous time around, the RBI has given banks the option of extending the moratorium or extending the repayment period. So there is some kind of a relief for MSMEs also. But as I said, the response of MSMEs has been really not really very good. I remember seeing reports on how probably the restructuring would account for less than 10% of the exposure of MSME, as in the loans taken by MSME. So that is it's just a fraction of an amount that is going to be restructured. RBI has also allowed banks to reassess the working capital requirements of MSMEs. So banks can now again reassess what is the working capital requirement of an MSME in the current scenario and increase the working capital limits that are sanctioned. So that is another thing that has been done for MSMEs. MSMEs going ahead again has been the focus of the government, of the RBI, a potential, I think, a very important, vote bank also. So,
constituency, yes.
Constituency, exactly. So, it is something if there are more demands coming days, depending on how the pandemic impacts them, I'm sure the government and the RBI will be proactive in announcing steps for them.
Right. Okay. This question is from Yash Nagpal. Ramya, can you please tell us whether this phase of the pandemic has hit the economy even harder than the last time? Is there any way to measure how badly this phase has hit? So, there was talk of green shoots being visible after the last COVID phase, seemed to improve a little bit. How has it really set us back? How bad is the situation as far as the economy?
So as I was mentioning even before, this time the impact, even what RBI has said, and even what many economists are saying, is not going to be as worse as last time. It will be better this time around, as in the impact would be lesser this time around. Primarily because though services sector continues, has been hit, there is no complete shutdown, right? Manufacturing units continue to operate. Services also, to some extent, some services sectors are operating. Even an airline is operating, but in limited capacity, but there's not a complete shutdown. So the impact will be there. In terms of growth rates, if you would look at, because last year has already been a steep contraction and there was like a negative growth rate, probably the growth rates this year will remain positive. But say, against an initial expectation of 11% growth in the entire fiscal or a 12% growth in the entire fiscal, the growth rates could be lower. So is what economists are saying. The RBI governor, interestingly, has not changed the growth rates, or but he has talked about on how he doesn't expect too much change in the growth forecast. But one will have a clearer picture next month in June first week, when the Monetary Policy Committee will meet again and they will again review these growth rates. So the last time the growth rates that they had projected was 10.5% for the entire fiscal, that is 2021-22.
Okay. This question is from Karan Pandey. what happens to individuals like us, taxpayers like us? We keep hearing about relief measures and stops for this sector and that sector, but nothing seems to come our way. So I think everybody's feeling the pinch of the economy's complete spin downward.
I don't think that there's nothing much that's going to come our way again this time around also, because as I said, the economic activity is not that badly impacted as last time. And the government has been very clear that they don't really want to give cash in the hands of the people, because their feeling is that if cash is given to people, what they will do is they will actually go to the bank and save. They will not really spend that money. So what the government wants is more people to go out and spend. And how the government plans to kickstart investment is the government is going to spend, and the government is going to spend in sectors like infrastructure, because infrastructure employs a lot of people. There are high multipliers, the high growth multipliers. So that is the policy that the government has taken so far, and I think going ahead also that's what's going to come.
Right. All right, Ramya, we're running out of time. There are some questions that are still left, but perhaps you can go on YouTube and leave, reply to this comment. Thank you so much for explaining what the announcement by the RBI governor does mean. It's a bit of a technical issue, but I have at least got clarity at the end of this episode of Government Matters, so I'm sure our viewers have too. Thank you so much for watching Government Matters and for sending in your questions. Do stay tuned at 7:30 p.m. this evening. We have a live in Hindi between the Prince editor-in-chief Shikhar Gupta and Apurva Mundhani in his show Headlines to Piche Kya Hai. So you can send in any questions you wish to on current issues, on the big news stories of the day, whatever intrigues you and whatever you'd like him to post.